yield fell below 4% for the first time in 5 months. This comes less than a week before the next Fed decision. Joining us now from the Zelman Housing Conference in Boston is CNBC senior real estate reporter Diana Olick. Diana, great to see you. What do you make of this drop, and what could 25 or 50 basis points in cuts next week do to the mortgage rate?
Well, Melissa, despite the two economic indicators we saw this morning, we only saw mortgage rates drop 2 basis points, so we're now at 6.27%. But inside the room across from me, you have hundreds of home builders, mortgage lenders, investors, land developers, and Ivy Zelman, one of the great analysts, putting up 87 slides literally on the state of the housing market. And what she pointed to was really that affordability as the main headwind and how that translates into mortgage rates buy downs. What she said was that 72% of the builders are now buying down mortgage rates, and she said that 1/2 of those rate buy downs are more than 100 basis points each, and that is going to continue to put pressure on builder margins. So the question is, how much longer can they do that? Because even though rates are considerably lower than they were just 6 months ago, you don't know that next week, if the Fed lowers rates, are mortgage rates going to pop back up a little again because they've already been priced in so early, Melissa?
So if they're buying down 100 basis points, does that mean that the mortgage that somebody's getting, if they're buying one of these new builds, is around 5%?
Yes, it is. And that's how the builders are getting their buyers in the door. And, you know, it's a lot of talk around here also is how much the builders are prepared. If rates do come down even more, do they have the supply? Now, we look at the supply of both new and existing homes, and it's very high right now because a lot of the builders, namely D.R. Horton and Lennar, have been doing a ton of spec building. That is building without a buyer as opposed to just buying on demand from specific buyers. Some builders think that's the right strategy. Some don't. I spoke to Ryan Marshall here. He's the CEO of Pulte. He says that is not what he thinks is the best strategy because you could get holding the bag on a lot of these homes if people still can't afford them. So the question is, do builders keep putting holes in the ground when they don't have the buyers? Is that the right strategy, or is it better to be a little more perhaps conservative on the construction?
So that's new home supply, and at the same time, you have really rising secondary supply out there. And, you know, it's really a funny moment in the housing market in a sense because you have that supply issue and then affordability is the real problem. So does that mean that price resolves this at some point?
Not yet. I mean, Ivy does predict that prices will go negative nationally very briefly next year and then rise again in 2027. Whether that happens, she said she's still not even sure about that because, again, it's these pressures on who's in the market. If you look at supply specifically, the supply is actually on the low end, you have sales being the lowest and supply the highest, which means that the low-end buyer cannot get in even to that low-end home, and so that supply is really high. On the luxury side, you see more buyers, but you see far fewer homes available for sale, which again pushes those prices higher. And if you really have the higher-end buyer, the only action in the market, because the lower end is still renting, then you're going to see prices continue to go up because that's going to be how the median shows.
Right. Diana, thank you.